Welcome back to a brand new episode of Succeed Podcast with your man, Dream Motivation. That boy Russell Thompson is in the building. Listen, like I always say, y'all better go ahead and get your notes ready. Let's go. Welcome back to a brand new episode. Listen, man, first of all, it's been an honor, man. Thank you I wasn't expecting you to ask me to co-host this thing. I would be happy to be what they call it, the fly on the wall,
man,
catching this game. And for the past two episodes that I've seen and the people I met, especially, I ain't gonna lie, my favorite, just shout out to your mom, man. Shout out to her and learning your foundation, learning, where you got all your game from, her being disciplined on you. Yeah. And she's just so sweet, man. So I could tell her, so shout out to your mother and everything that she installed into you, man. And, man, let's have some fun, man. Let's get it popping. So I know in every one of our episodes that we go ahead and do a deep dive in, you go ahead and break down a title, and then we get to learn the education spot. So let's break it down. On this one is going to be called what?
The financial formula.
The financial formula. So, we about to break down how to.
Man, bro, this right here, like I said, because we do financial planning, and a lot of people don't know what it really means to financially plan. Okay, so we're gonna break it down for you today, and make sure you understand this concept. So, the financial formula is based on your personal living expenses. See? If you don't know how to put that into what we call a percentage-based model, then you can never grow. So the question is that, how much money of your income should be allocated for a mortgage? See? So it's on percentage base.
Oh, is this the 15, 25?
60, 25, 15 on the business side. But we're going to talk about the business side. We're going to talk about that, and we're going to talk about the personal side.
Gotcha.
So this is what the financial formula is all about. What is your formula breakdown on your personal side, which is your homestead, and then on your business side, which is your business. So this is very important to know this stuff, right? So nobody taught me this until, you put older people in your circle, older mentors. They start telling you all these things. And first thing I kept hearing from older mentors was like, man, you need to pay yourself first.
I always heard that.
Everybody always say, you need to pay yourself. Well, what does that really mean?
Yeah, because that's tough when you're a sole proprietor. I don't say that because, basically, if the rent due. Right. You know what I'm saying? We ain't being like, I forget my money and you don't pay the rent. Sorry. You know what I'm saying? Right. So let's break that down and let's educate. And I want to pause for the cause, man, because for those people who are privileged and honored to hear these vibrations coming through their iPhones or Androids or
whatever
computer systems, where they at, let there be no confusion that this was, for whatever reason, I taught in school. You know what I'm saying?
Yeah.
And that's a problem for me because every time I hear you talk, I ain't gonna lie, I get more and more pissed off that I lived through a life. I was talking to Keidra the other day and just living through life, you know what I'm saying, going to, some great schools, but no disrespect, but, I still to this day haven't used algebra, bro. I haven't used algebra 2, 1, U.S. history. Well, I kind of know, I guess, but it's just stuff I didn't, to me, it's like, bro,
well, you go back, man, you look at who created the education system. I'm surprised Mom didn't say this, but Rockefeller's the one created it.
And
he created it for you to be a workforce, not an entrepreneur. And so you can even imagine, you're frustrated. I went through graduate school, not one class for teaching you how to start your own business.
And you paid for that?
Yeah.
4 years?
Yeah, 4 years undergrad, 3 years grad school. So I got 7 years of business school.
7 years.
And it's like a doctor or a lawyer.
7 years and whatever amount of money.
Oh, yeah.
That you can't get back, and it's gone.
Right. And so
Imagine somebody like you said. Shout out to. I love what you're doing. Please, bro, I need to be in on it.
Yeah.
What you're doing for the children.
Absolutely, dog.
They're learning something at such an early age that is gonna. Because you know what I was thinking.
Mm-hmm.
I was thinking that. You know, and we'll talk about DMU later. I started an Entrepreneurial Online Academy, but I was thinking like, what if we all graduated with 700 credit scores?
Think about that, bro. Well, man, you know that when you come out of high school and college, you can stage that. And that's what, our white brothers have their kids coming out of college with 800 credit scores because they have them on their credit.
The authorized users.
Exactly.
Started their credit.
Right.
Then they
start building the primaries for them and put some authorized users on them. And then they out here with 800 coming out of college.
Come on, listen, man. Okay, all right.
Okay,
I'm ready. Let's get your notes out. Everybody get ready because you're out to succeed. We want to make sure that you're not missing no beats. Let's get it.
Man, let's get it, Doc. So listen, when you're looking at your personal household, they always told me, Dream, that you have to have your personal house in order before you can actually have your business house in order.
Yeah, makes sense.
Right? You got to have your personal house in order before you can entertain anybody else in business. Personal has to be done. It has to be in a percentage-based model. So when people taught me this, people always say, well, you need a budget. What does that mean? That doesn't mean nothing to me when you say, I need a budget. What does that mean? Right? But what percentage-based modeling does, it does teach us how to. So for example, 43% of your income, I don't care what you make, 43% of your income needs to be put to paying yourself first. Hold on, let's talk about it. Let's just think about this because what we don't understand is it got to be in a percentage-based model.
Okay.
So if you make, and I'm gonna go back, so 43% of your income, what does that include? So if you go to church and you pay tithe and offering, that's included in that 43%. So I take 18% of that 43% and I have it for charitable giving. See, what it is, Dream, is that we let people get off track. You let somebody on the street, ask for $1, but you didn't have the dollar allocated to give them. See, but if you have it already allocated, then you don't let nobody get you off track, especially when it comes to your personal finances. So here's the formula. You're going to spend 18% on charitable giving. Now, that if you give money to tithe, which is 10%, you give money to offering, which is another 5%, then people in the community are still going to ask you for things. So you need to have some money allocated for that.
So in other words, if somebody give you right. Everybody, for illustration purposes, when you as an entrepreneur make $100,
that's correct.
You need to take $43 and put it to the side.
$43 is being put to the side because that's for my paying me first. And what I mean by that, I'm going to use that to pay tithe and offering, number one. Number two, I'm going to save 10% of that money. Out of that 43%, 10% it goes to my savings. All right, because I'm still paying myself first. Another 10% goes to my investments. So out of this 43%, you're now looking at, we got 10% tithe, 5% offering, 3% for community, right? We got 10% for savings. We got 10% for investments, right? And then the last 5% of that 43% is for pleasure. See? So you got kids, you better know how to make them happy. Take 2% of that 5% and use it on your kids. You have a wife, you better make sure you make her happy.
Yeah.
And take 2% of that 5% and spend it on your wife.
Yeah.
Take that 1% and spend it on yourself. But now you're in a percentage-based model, which means that when your income goes up, come on, man, your giving goes up.
Hold up. Let's go back, because for those who are probably thinking the same question I'm thinking when you're starting, what if your personal expenses are absorbed by just everything, so you don't have a percentage at the end?
Right.
I mean, I'm talking about.
Right.
Yeah, there ain't no 43% after you don't pay the it's gone. You know what I'm saying? My man got the card note, got the
right.
You know what I'm saying? I'm just saying, I guess it would be to mature into this thinking and to understand as you're making more money, you need to start doing that.
And this is very important for a lot of people because, now we're going to talk about the expenditure side.
Gotcha.
So 43% we allocated for our personal side, but now we have 57% allocated for our expenditure side. And this is where a lot of people are making a mistake. How much of your total money should be used for housing? I'm asking that question. What do you think, Dream? So for where I'm talking about on percentage base. I'm not talking about how much technically of your percentage of your money should you be spending on living?
On housing?
On housing.
You gave me a little bit of cheat code because you took away 43%.
25%. Do you hear me? So that means if you make $1,000 a month, you can't afford an apartment. You can only afford to live in a room at $250 a month. Does it make sense? But when you start making $2,000 a month, you got $500. When you make $10,000 a month, you got $2,500 allocated for your living expense. You're not going to make less money. You're going to make more money. So this is about discipline, about knowing what you can afford and not going over your means. So I meet people all day long that paying 55% of their money into a property. How you going to have anything for anything else? That's not the right way to do it. So you have to get into the financial formula here. That's what we're talking about. So we're making sure that you understand percentage-based modeling, right? Because if I'm on percentage-based modeling, when I make more money the next year, I have more money allocated for that particular category. So you're asking me, how do I pay my expenses, right? Well, how much do you think should be allocated towards a car note?
Well, you talking 10%?
So 7 to 8%, man. You see? So now what they're doing, Dream, is that you're now able to go down and look at your entire situation, right? And see if you over or under. And that's why there's something called competition. Because if you're paying more for your insurance than your actual budget allows you to do it, then you need to be checking for cheaper insurance. Nobody taught us this, man. Nobody said nothing to us about percentage-based modeling and how the wealthy live off this. They understand that they're going to make more money. They're not going to make less.
My own notes are here.
Okay? So if you base your personal living, oh my goodness, man, off of percentage-based modeling, they have showed that divorce rates are a lot less.
Because of no stress.
Man, because the two people are on the same page and they understand the percentage-based model.
Gotcha.
So if a husband and wife can understand the percentage-based model, bro, oh, they finna grow exponentially, bro.
Gotcha.
Does it make sense?
That's powerful.
So, again, it don't make, if you have a McDonald's income.
Based on your application, like, well, I'm already in here. Like,
right. So let me give an example. When I was in college, right, full-time student, I can only make probably $1,000, $1,500 a month, bro.
Mm-hmm.
But I still got expenses. So I had to put that in the percentage-based model, man. Got it? So you can't, it's about what you make, it's about what your current income is, because you're going from a current income to a potential income. That's what you're going to. You already have now, and God is going to bless because now it's in a percentage base. You're not over living. You're not under living. You're doing it in a percentage base.
Got you. So if your money go up,
your living expenses can go up. Nothing hurts.
Yeah.
You're not pulling more from another category than you should be, saving more in, right?
Got it.
So if God bless you, start making $100,000 a month.
There you go.
Then we can afford $25,000 property.
Gotcha.
Every month.
Gotcha. Okay.
Right? If we making $100,000 a month, we can afford $7,000 to $8,000 in car notes.
Gotcha.
Now, if you're renting an apartment, really 20% towards the rent, 5% towards the savings of the down payment on the house. Your objective is to get into a house. So you need to be spending 20% on your apartment and saving 5% for your future home. So we're talking about the 57% of expenditures now. We talked about the 43% earlier about paying yourself first through tithe and offering, community, investment, savings, and pleasure. Making sure you take care of your wife, your kids, and yourself, okay? Do something that you love. But the 57%, if we do this right, y'all, we grow exponentially. We grow with our money. Does it make sense? You're not overdoing anything, okay? So 25% again for mortgage / savings, right? Or rent / savings, whichever your situation is, right? Insurance says 10%. Now, insurance, you got multiple different types of insurance, right? You got property insurance, you got vehicle insurance, you got, medical, life insurance. 10% of your income, what I'm trying to tell you, right? That's what you can afford.
Gotcha.
That's it, okay? So don't let nobody else talk you out of trying to afford something that is not fitting into your formula. That's why we call this the financial formula, right?
Got it.
Because now you inside you operating inside of you, right? They say 5% of everything you make should only be used towards utilities. Come on.
Utilities.
That's your water bill, electric bill.
Yeah.
Right? Maybe internet, right? So only 5%, right?
Makes sense.
Transportation, they say 6%. Okay? So this 57% is being broken down into these percentage bases, y'all. And this is why the wealthy are winning. Because they're not going to go buy a property outside this percentage base. Doesn't make sense? Gotcha. If this property is not going to put them at 40% of their income, they're not going to buy it. See? But if they under that 25%, oh, they finna buy it.
Because they there. They made it.
They are. Gotcha. They're not ruining the formula, right? So now, transportation 6%, food and beverage. Some of us need to be cooking meals at home.
For sure.
Instead of going out to eat all the time. Yeah. Again, if a husband and wife can communicate that, man, that's easy, bro. Now you got something so solid, man. They're like, man. So we make together the X amount of dollars. This is how much we can use to go out to eat.
Gotcha.
This is what we're going to use to go grocery shop. Hey, this is what we are missing, Drake. Man, when we master this, bro, it's a wrap. Again, and then the last one is 5%, which goes to debt, right?
5% is debt, which you owe?
Oh, credit cards, anybody you owe. Wow. So keep your debt under 5%.
Yeah. Yeah, and that's actually for credit cards, I know that. That's how your credit score increases. And your lines of credit increases. They want to give you higher limits. Gotcha.
They're watching you. This is the discipline piece about entrepreneurship.
Yeah.
Now, we can't even entertain really a business if we don't have this.
Gotcha.
It doesn't even make no sense to go out and work all this hard and then don't have it in a model to where we can show something out of it. This is based on, so what we're going to do, Dream, is I got a sheet.
Okay.
Like we can give everybody.
Okay.
You can download it some kind of way or something. And then it can show them like, what is my income? What is my projected income or the income that I want to make? Come on, man. So now you seeing both scenarios of this. And then now we're going down the list, man. I make $5,000 a month. Okay, what's my mortgage? Oh my God, I'm at 42%. See? Now you starting to say I'm over.
Gotcha.
Oh, insurance. Man, I'm under 8%, man. I'm good. Insurance, I'm good on that month.
Gotcha.
You got it? Now you being able to see where you're at.
Gotcha.
And now you can correct it. Does it make sense?
That's powerful.
So this is the most powerful thing on the planet, man. So I know we got, so everybody that's operating a business, take these notes and operate in a percentage-based model for your personal living situation. It will change your life. Yeah. It will bless you. Okay? And we're about to go to a commercial.
Yep.
Go ahead, Drake.
Listen, y'all, we're about to head to a commercial. Before we get off of this one, I need y'all to like, share, subscribe, and make sure you don't miss the opportunity to check out that social media, man. Let's get it. Yo, thank y'all for hanging out with us in the Succeed podcast. Listen, let me ask y'all a question. What if there was an online person that was teaching you what you could do, learn. All the stuff that you didn't learn in school. What if you had an instructor? What if there was a community? What if there was somewhere you could actually go online, tap in how to learn about your credit, how to learn about your finances, how to learn about business credit, how to own a home the proper way, or even in this case, how to have a trust so you can own nothing but control everything. There might be a place for you. Matter of fact, I know there is. BMUexperience.com. Y'all go ahead and check out Dream Motivation University. Check out the website. Just go check it out. I know you're going to like it. Now let back to Essa right now. Welcome back to the Succeed Podcast. Listen, Russell Thompson is dropping fireballs all over the place. Like the Mario Brothers, we get the load up with the fire and just dropping them all around here.
Yeah.
And I'm learning probably more in one episode that I probably learned in the past 2 years, right? So for those who did not catch any of that, please press rewind. Please slow it down. Please write down notes. Please catch the beat as we're learning financial freedom right now. You know what I'm saying?
Man, the financial formula leads to financial freedom. And it's very important as entrepreneurs that we understand this on the personal side, but also dream on the business side, okay? And, wealthy people operate in percentage-based models. That's what they do, okay? Because percentage-based models invite growth. When you grow with the model.
Gotcha.
Right? So if it's percentage-based, it grows with you. And so we're talking about the financial formula today. We talked about, in your personal side, you need to allocate 43% of what you make. It doesn't matter what you make to pay yourself. Paying yourself includes basically your tithe and offering, your charitable giving to your community, your savings account, your investments, and even your pleasure, making sure that your children and your wife are taken care of. You guys are able to do things of your liking. But now we're going to switch it over to the business side, Dre. Because a lot of people don't know how to pay themselves out of the business to get the income to come into the personal household, right? And this is where a lot of, entrepreneurs are struggling because, first of all, if you're starting up, how do you even pay yourself, right?
Right.
So we're going to start by looking at the IRS perspective. You are 100%. Your whole body represents 100%. Whatever you tell the IRS you putting your efforts into has to actually equal up to 100%. Right? So if you own 10% of a company, then where's the other 90%? See? So what this financial formula is going to do for us is teach us how to pay ourselves, right? In the business side, so that we can have money on the personal side.
Got you.
Okay, so 20 or 60, 25, 15.
Yeah, that's where it's at.
Excuse me.
Got you.
So what does the 15% represent? The 15% represents your savings that you're going to save inside the business. Very important.
50% needs to be set to the side.
Right. So every dollar your business makes, you need to save 15%.
Gotcha.
Why? That 15% does a lot for your business. First of all, it's going to be enough to handle the taxable liability that you incur out of the business. Let me say that again. It's going to be more than enough, right, to handle the tax liability that you're incurring in the business.
So by the time taxes come out, you just pull it out that 15% and you good.
And you pay the taxes.
Got it.
25% represents your reasonable salary. So if I'm starting up a new business, right, and there's no income coming in, how do you justify to the IRS what is your reasonable salary? So the only thing you can do is say, hey, 20 to 25% of the gross income that comes through this business will be allocated as my reasonable salary.
What do you do if somebody starts that whole percentage deal and then at the end of the month, they're in the red?
They're off. Yeah.
What does that person do?
They got to get back in the black.
You got to get back in the black. Just, go back in, do what you got to do.
Yeah, and the good thing about that is that you're able to see that.
Gotcha.
By operating in the percentage-based model.
Got it.
You're not looking at the end of the year and say, man, I was off the whole time, right? No, you're going to be able to catch it pretty quickly. So that 25%, and what this does is that this is the only taxable income that you really have to pay, right? Because you're starting off, you don't know how much the company's going to make. Am I right?
Gotcha.
See? And this is where that percentage-based modeling comes in, because all you saying to the IRS is, hey, look, we don't know what it's going to, this is brand new. All I can take as a reasonable salary is a percentage of the income. Does that make sense?
Gotcha.
And if I'm taking 25% of the gross profits, that's more than reasonable. Make sense? Okay?
Gotcha.
So if we're operating with 15% in our savings, 25% in our as our reasonable salary, which means that 15% should be going into your business savings account. Am I right?
In the business savings.
Right? 25% should be going to your personal checking account.
Got it.
See?
Okay.
That's the money that feeds into your personal household. See? And now you have the percentage-based model for that money that comes into your personal household.
Got it.
But what's also very impressive about an entrepreneur is that if you own 100% of your own company, then you can now use the company as a way to pay some of those expenses. So we start looking at car notes over there. We said we got 6% allocated over there on the personal side. But now car note can be paid through the business. Come on now.
Got you.
See?
There you go.
You got money for communication and phone and utilities and all that. But now some of that can be paid through the business now. Come on.
Got it.
See? Your gas and all the stuff. Some of that stuff now, your food. See?
Got it.
So the formula on the business side is, hey, look, take 60% to operate through the business with expenses. 25% is your reasonable salary. 15% is your savings.
Got it.
If you operate like that,
can't lose.
You have no taxable liability.
Because you already good. You got it already set to the side. Fire.
Easy, man.
Man, I hope y'all, hey, listen. I hope y'all didn't miss that. And if you did, please plus rewind, because I know I am. Ain't gonna take in that thing.
So when we're talking about this 60% that we have to operate with, right? We got to really look at that and really how that fluctuates. That's going to be customized to everybody's different business. Whatever your business calls for, right? You might have more of that 6% going to payroll because you got employees. You might have more of that 60% going towards purchasing equipment or materials that you need in order to conduct your business. So that 60% is going to be in a percentage-based model, but it's up to you to decide what that is. So you got to spend money in advertising. You got to spend money in rent. You got to spend money in phones. How much percentage of that of my coming in is allocated towards each one of them categories? Right? Well, you figure that out. Game on. Man, Doc, just, I guess, business school and experience, man.
That's right. You did, because I'm sorry.
I mean, I went to business school.
This is 7 years, guys.
So, but like I said, they just didn't teach you how to start your own business. Now, they taught you how to run somebody else's business. Come on. Right? So, they going to make sure you know how to run somebody else's business. But they ain't going to teach you how to start your own business. You have to figure it out yourself.
Watch you. All right.
Oh, but they going to make you a master, or, hey, man, you take this guy's business and take it on to the next level, right?
How do you start it up, though? They ain't going to teach you.
No, you don't say nothing about that.
Got you. All right.
Okay? So, most Black folks are in a fearful operating mode as a entrepreneur, man.
Man, for sure.
I can't tell you, man, that I met a cat that told me the last quarter of the year, he shut down. He don't want to make no more money.
What?
He don't want to go into the next taxable
bracket.
Right. I said, bro, is that the right way to even think about that? we have to now understand if we operate in a formula, man, I can run it up, Dream, as much as I want.
Right, because the percentages ain't gonna change.
So if I make 100,000, if I make $1 million, if I make 100 million,
it still applies.
I still got enough to pay the tax liability. Yeah,
15.
come on, bro.
I'm downloading, bro. I got
download, bro.
I'm downloading.
Man, if we figure this out, man.
Nah, that's powerful.
It is a wrap.
A lot of people been asking about this t-shirts, man. A lot of people been asking, like, what's going on with the sheet t-shirts and the true meaning behind, control nothing, which sounds crazy. Control everything but own nothing. And I remember when I first heard it, and Keisha had said it in the car one time. I didn't even tell her about it. She's like, yeah, I've been hearing this, own nothing but control everything situation. I'm like, Russ just said this the other day when we were speaking. How powerful is this when you're applying this to everything right now?
It's everything, man, because again, in order for you to operate in owning nothing but controlling everything, it's got to be in percentage base, man. That's the secret to it, brother.
Back to the formula.
See, that's the secret to it. So again, now you're taking what you had on the personal side and basically using that same formula when it comes to your trust. Come on now. The trust ain't gonna buy no more than it's only gonna take 25% of what it has to buy for properties. Come on, man. Stay in the same formula, bro. And you just run it up. And you teach your kids this. And your kids now not buying things out of their budget. And we're adding more revenue streams as we go along anyway.
So they can come in and you can, because I know you do like a free consultation.
Yeah. The first thing I want to do is look at, your whole entire situation. Yeah. I'm going to look at, income, whether you do W-2 or W-9. I'm going to look at businesses, how many businesses you have, where they're located. I'm going to look at properties. I'm going to look at vehicles, insurance, investments, and even charity. I'm going to look at all 7 of those things. Once I look at that, I have a full assessment. I know exactly what to do, right? But this own nothing, control everything concept has to be built on the IRS code, which means that I have to take a reasonable salary. If you're not paying your share of self-employment taxes, they coming after you. So all these people that, got these trusts set up with the LLCs, and they say, well, I only own 10% of my LLC and 90% is owned by my trust. Where's your other 90% of your effort? That's not going to work.
I know some people right now listening to this thing.
Like, so all these people got this stuff set up.
Yeah.
Listen to me. We're looking at it from the tax standpoint side of it, right? So you got to be in compliance with the IRS. So the best way to do that, again, set up your S Corp.
Mm-hmm.
You set up your S Corp now. That is your reasonable salary, man. That's it. IRS, this is what I do 100% of the time. I love doing it. I love my job. I love it. It's my 100% of my efforts. But everything else I create, if I can create it, I should not have to pay the taxes on it because I can use another vehicle called a capital holding company that owns my share of the ownership. So Dream, we already gonna collab on a lot of things. We only hey look.
Wait.
And so when we collab on something, your percentage of ownership or whatever we collab on is going to your capital holding company.
Got it.
Mine is coming to my capital holding company. Me and you, Dream, don't have no taxable liability. But we have control and access over everything in that capital holding company.
This probably happened to a lot of people, man. Shout out to, I remember looking at this story with MC Hammer, bro.
Right. So every person you meet gonna have multiple streams of income. And the reason why we're so successful, that's the reason why we're called Succeed. When we show them, man, how to own nothing, control everything, put themselves into one entity, right? And let your other 7 revenue streams come into your estate. We changing lives, man. We're optimizing people's taxable liabilities, right? We're not scared of the IRS. Neither should you be. You should be able to sleep at night, okay? And make as much money as you want. because we're in compliance. We know how to comply. That's it, Doc. We don't veer to the left or to the right. This is about discipline. You know, my mission for Succeed is, you know, training the next generation of entrepreneurs, but we promote financial independence, discipline. This is the discipline piece on it, right? Freedom, and of course, entrepreneurship, right? So all we're doing is assisting you in every entrepreneurial idea you have. We're giving you the education behind it so that you can be successful or whatever you do.
One thing I like about what you do, man, you love what you do. I could tell you're very passionate. You like helping people, and you like, you know what I'm saying, seeing people succeed. You know what I'm saying?
Man, it's, you know, it's just a blessing, man, to just be riding through the city, bro. And you look up and say, dang, I started that LLC.
That's what's up.
They still in existence today.
That's what's up.
It gives you chills, bro.
And that's why your clients love you.
And so, man, I love it. I love it. You know, I want everybody to be successful. You know, this is how I was built, man. My mother wanted everybody to be successful. And I just took it to the business world. And what's so strange about it is that I was pushed into the health world. I have a minor in healthcare administration.
Oh, wow.
And so I was supposed to be, you know, a nursing home administrator. But when I got in there with my business background, I saw the amount of liability that the nursing home administrator carries. And I said, I can't do this. It's because I'm at the house chilling and one of the workers then drop somebody and they smell alcohol in his breath, and now who they blaming? They not blaming him. The feds on me.
Oh, wow.
See? So liability is everything. Taxation is next. You have to figure out those two things, how to minimize those two things. And like Ebony was saying, how do you avoid a lawsuit? Well, minimize your liability. They can't sue what they don't know.
This boy is just a whole walking webinar all day, every day. Shout out to you.
So,
man.
Listen, we're going to get our people, especially our people in the DFW. It don't matter where you at. We are going to get y'all into the percentage-based model, right, Dream?
That's right.
On the personal side, we follow everybody. Let's follow this model together. You're not having to pay for none of this.
Correct.
If we all as a group of people say, you know what, let's follow this, man, I'm telling y'all, man, we're going to be dangerous. We're going to be dangerous, bro.
That's powerful.
Because now we can operate within the guidelines of the IRS and the tax code. And man, now, bro, I love it. That's why the IRS love me. They love everybody. They love all my clients. Because we pay taxes, man. We don't work.
Yeah, it's structured up.
But the way you're paying it.
Yeah.
So it would be different if the IRS said, man, your taxes are due on December 31st. They give us another 90 days. If we operate in that formula,
yeah,
we got the money already.
You already done. Man, shout out to you, man. Listen, I hope y'all getting some value out of the Succeed podcast. My man, Russell Thompson, breaking us off as always, man. And just in case somebody's listening to you right now and they want to get at you, I know you got a couple of people that you can, you know, they could call, and I know you got consultations for them.
Yeah, if you want to get a free consultation, give us a call. We're here to help you. And, you know, we have everything from, you know, we have the Succeed Credit Group. We got the Succeed Management Group that helps you with all your addresses, your phone numbers, your email, your domains. Remember, the foundation is very important. We have Succeed Business Group that does all your filings for you, whether you want to do an LLC or PLLC, LLP, or whatever you want to do. C Corp, S Corp, it don't matter. Nonprofit, Dream, it don't matter.
Got it.
Any state, it doesn't matter. We can do all those filings for you. Okay, we got the marketing group. Me and Dream are collaborating on right now. Succeed Marketing Group, man. Anything you need for logos, websites, social media, man, podcast, Doc. Where am I at?
We in the building.
I'm in Dream Entertainment.
Let's go.
So that's what's gonna funnel through Succeed Marketing Group. So we got that. We got Succeed Accounting and Tax, Doc. I mean, I got the accountings over there ready to do get your monthly accounting done for you, man. We got CPAs that sign off on a tax return. And then my bread and butter, shout out to Miss Jackson, Hennessy Jackson, shout out. She's going to be the enrolled IRS agent that we're going to have in-house.
Wow.
And so that's very important because, again, like I said, everybody, we comply. We want to be in compliance with everything, right?
Yeah.
So we have all those people to ensure compliance, right? We have Succeed Estate Plan and Trust, man.
Powerful.
So we got Succeed Insurance Group. So we got that too. You go on our website, you'll see all of that. But you want to get in touch with Miss Clark, who's the executive director. My assistant, 214-292-8836. I'm finna give y'all my cell phone number. But she will set you up for an appointment. You get a 30-minute consultation. I'll be able to access everything you're doing. And you're going to get the helicopter view. We're going to give it straight to you, so you see the big picture. Ain't no sense of trying to give you bits and pieces. I want you to understand the magnitude of what you have to deal with and what you have to plan for so that you can plan for it. Okay? Rome was not built in a day. That means you can't do everything in a day. All you can do is plan it out.
Right.
So I got a guy right now that, he wants 4 trusts. Guess what? He getting a trust every year. That's his plan. Yeah. That's a plan. Okay? So you can't just do it all at one time. Yeah. Plan for it, though. So that's why we at the Financial Formula, man. Thanks so much, Dre.
Hey.
Boy, man, this is awesome, man. I'm going to keep going and keep going, man. And we got so many topics to discuss. And like I said, I hope you're learning something from this. Hope that, this is blessing you and your business and your employees, man. God bless y'all, man. Take care. Thank y'all so much.
Like, share, and subscribe. Don't play yourself. Let's get it.